Invest in S REITs, a basic and boring strategy. Hi everyone, here is where I introduce to you REITs that are traded in SGX. It is for people who are interested in investing in REITs as a passive income source for their retirement or leisure. It has come a long way for me. I have a full-time job, earning a decent salary, and try to save as much as possible, with my wife. After setting aside a minimum amount of money which my family can tap when there is an urgent need, I invested the rest. At this point when I am writing, I had about $200,000 worth of investment, generating $20,000 of passive income every year. I hope you enjoy this information package and learn as much as possible. Yield of a REIT is calculated based. This formula here is an example of the table that I have worked out. For example, AIMSUMP Capital REIT is trading at 7.67% yield. This means that for every $1,000 you invest in it, you are going to get $76.70 as dividends per year. Compared to a Sendas REIT where the yield is 5.88%, it means that for every $1,000 you invested in a Sendas REIT, you get only $58.80 per year. Therefore, you get about $19 lesser. Thus, it is important that one should find out the dividends that they pay per year and divide it by their trading price to get an accurate reflection of your investment should you do so. In general, the higher the yield, the more attractive it is. However, it might also imply that it is a more risky investment. As someone who wants to have a steady stream of income, I would want a higher yield to maximize my investments. Thus, I have made a criteria to invest in REITs which gives at least 8% yield. Net asset value, NAV, is the valuation of the REIT. It comprises on the valuation of its properties minus its liabilities, which generally are loans that they have taken. It also means that if they manage to sell the properties at valuation price and clear off all their liabilities, this is the amount each unit holder they will get back. Some examples are shown below. This is important because it helps to classify listed REITs into two categories, the premium REITs and discounted REITs. Premium REITs are those which are trading at above NAV. For example, stock price of Mapletree Logistics REIT is $1.175 while its NAV is $1.047. It means that you are paying an extra $0.128 per unit to own something that is worth $1.047. In short, you are paying more. Discounted REITs are the opposite. They are trading at a level below NAV. For example, stock price of Keppel REIT is $1.210 while the NAV is $1.358. It means that you are paying only $1.210 to own something that is actually worth $1.358. It is just like buying properties at a discount. Thus it brings down to what I call the price-to-book ratio. The lower the ratio, the cheaper it is. For example, price-to-book ratio for Keppel REIT is 0.891. This means that you are paying about 11% less than what it values. It helps you to compare one REIT with the rest easily. There are various reasons for this. For example, there are REITs with strong sponsor and or manager which bring in confidence. Also, the quality of the properties it holds also makes a difference. I am not an expert in valuing properties. Thus, as a retail investor, I rely on and trusted these information given to us. Personally, I prefer discounted REITs because I am getting something which is actually worth more. No point paying for something that is worth less than it actually is. Moreover, I am more concerned about margin of safety, which I have learned it from reading one of the investment books. Discounted REITs have a higher margin of safety because they are already trading at a lower value while premium REITs do not have. Thus, I believe that if there is an economic downturn, premium REITs will be hit harder than discounted REITs. Therefore, I made it a point to purchase only discounted REITs. Divide its liabilities with its assets gives you its gearing, which illustrates how much debt they have. If you have been reading those reports, they take their loans divide by its assets, which I thought wasn't very correct because they have left out other liabilities. Therefore, if you have referred to my Excel sheet, you would notice that its gearing are higher than reported. This is a conservative measure which I thought was necessary as a conservative investor. Generally, the higher the gearing, the more risk it has taken and therefore, more risky to invest in them. When economies are good, it works well because banks are willing to lend. But when times are bad, like what happened in 2008/2009, some REITs need to raise cash from its investors to save themselves because their gearing was too high. Therefore it depends on whether you want to take the risk. Although low gearing is good, I have been investing in REITs which have high gearing simply because it offers a higher yield. This is probably the only risk which I am ready to take. This is something new which I have come out with, deriving from NAV. The scenario is this: in an event that loans are defaulted and banks tries to seize the assets, how much is left for the unit holders? For example, Capitamall has about $7.4 billion worth of properties that are unencumbered in January 2015. This means that in a worst-case scenario, no banks is able to seize these properties. If they sell of these properties at valuation price and repay debts which are unsecured, every unit holder can still get back $1.32 per unit. Another example will be Fraser Commercial Trust. It has only unsecured debts, so no banks is able to seize any of its properties. Therefore, you can see that its NAV and its secured NAV is exactly the same. The reason for looking at this indicator is that it brings in certainty and confidence to investors. Your properties are not mortgaged to the bank, and it would be rightfully yours. Won't you want this kind of investments? Let's look at Fraser Commercial Trust again. Its secured NAV of $1.614, which is actually higher to its trading price of $1.430. Therefore, it might be better if the REIT sells off everything and gives back cash to its unit holders. This has become increasingly a critical factor in my analysis, as there are more and more REITs trying to secure their assets to achieve stability in their portfolio. However, I have not placed a criteria to it. To me, the higher the better. This is an intangible factor which cannot be quantified. It just meant who is the one managing your assets. The stronger the sponsor, the less risk investors are perceived to take. In the local scene, we have strong sponsors backing some REITs. The local companies will include Ascendas, Capitaland, F&N, Mapletree, Keppel. Foreign backers would include Lippo Group, from Indonesia, and Li Ka-shing, from Hong Kong. With a strong sponsor, it is believed that they will do a better job as their own reputations are at stake. Therefore, choosing a REIT with a strong sponsor seems a good choice. However, because they have a strong sponsor, they tend to trade at a lower yield, which is not attractive. Therefore, it really depends on whether you want to take the risk. So what are the strategies which you can draw for yourself? What I am proposing here is a strategy which I have drawn for myself. Most of the criteria are already in the earlier sections. Here it is again. At least 8% yield. Of course, the higher the better. REITs that are trading at a discount to NAV, aka low price to book ratio, the lower the better. Increasing, I am looking at these factors, which include high secured NAV, no fixed range, low gearing. No fixed range, strong sponsor if possible. I followed this criteria religiously since 2011. That was the time where there were still quite a number of REITs which actually fulfills all these criterias. It is true that this investment strategy is basic and boring because you don't have to trade actively on the market and earn money through the fluctuation of the price. To me, as long as the price stays the same, it is good. I don't need them to appreciate in value. Thus, when I buy, I expect to hold them forever. So it is boring. And the good thing about being boring is that you don't have to spend every minute monitoring it. Alright, that is all. Enjoy investing and hope it can help to provide you with a steady passive income which you can enjoy.